So, good evening, everyone. My name is Maurya Hanspal, and we are back for one more great session on finance. Okay, so as the session has been titled as different ways to invest in market, so in this session we would be covering a few different ways to invest in market, of course, and I would also be talking about various kinds of instruments that can help you to get a certain rate of return in market, a higher rate of return in market, and also it can also help to preserve your existing capital in the market. So these are like some of the instruments that we would be talking about in today's session. Different ways to invest in stock market, or different ways to invest in market, because stock market is not the only market in which people invest. Now, a lot of the beginners in finance would be confused that what did I say right now? Okay, so let's talk about the first way to invest in market is to invest in stock market. First way to invest in market is to invest in stock market. The most common instrument to invest in stock market is your equity shares. These equity shares are the free floating shares in the market which is available for all the people who want to buy the shares and sell the shares. To start with equity, there is a difference between the free floating shares and the locked in shares in the market. All the shares that you are buying and selling in the market are the free floating shares, which are available for trading in the market, whereas those shares which are not available for trading in the market are held by the promoters of the company or the top management of the company are the locked in shares. In those shares, you cannot trade in the market, you cannot buy or sell these shares. So the first common instrument which I have started is equity, that is buying the common stock which is freely available in the market, the free floating shares. Equity is good for higher returns, as you always know. Equity is good for higher returns. Higher the amount of equity that you are buying, higher the risk that you are taking, because equity is always associated with risk. Because it starts to go with the market. If the market is rising and market बहुत ही अच्छी चल रही है, then your equity shares would also do well, provided the company is fundamentally strong. But when the economy is going into the context of recession, or when the economy is falling or the market is falling, the equity shares won't give you returns. At that time, your portfolio can even turn to zero or negative. Like for example, in the upward scenario, like when the market is going well or when the market is on the uprise, you invested 100 rupees in the market, the share price can go up to 200 rupees or 1000 rupees or 5000 rupees. In that case, it would be an upward trend in the market and the equity is performing well. But the second scenario is when the market is undergoing the phase of recession or when the market is falling. At that time, even a strong company which costs 200 rupees can go down to 50 rupees or 20 rupees. And the value of your investment, that is 100 rupees, it can even turn to zero or even negative. So the advantage of equity is higher the equity that you are buying, higher is the expected return and not the return. People say higher the risk, higher the return, but I say higher the risk, higher is the level of expected return. Because buying equity is not guaranteeing you a higher amount of return. Because huge amount of risk is also associated with equity. The dynamics of the market changes every day. Despite of so many commentaries on big channels or by like big experts that the market would reach this point or the market would fall below this point and these are the basic like some resistance levels or support levels, for all of you who do not know okay, what is like resistance and support levels, go back to the YouTube live session and watch my recording on technical analysis. In that session, I have covered that what do we mean by resistance and support and various other features in technical analysis. So in equity, it is unpredictable. It is higher the risk, higher the expected return. Agreed. Equity can give you the highest amount of return as compared to other instruments in the market because you are taking higher amount of risk in equity. And that is why equity gives you the maximum return that you can get in the market. The highest amount of return which an instrument can give you in the market is equity, which people used to think जो अब change हो रहा है. But at presently for the layman investors or also for some advanced investors के लिए भी equity is the best source of income. Okay, but equity में risk भी बहुत है. Okay, so equity can be mainly for those people who are aggressive investors. Aggressive investors means who want to take risk in the market, and basically the people who are like young, like maybe in the age of 20s or early 30s, who do not have so much responsibility upon them and can take risk in the market, should invest in equities, because that is the stage of your earning stage. You can lose some money, but at that time, like, you would be learning from the market that I invested in that wrong time, or I invested in that wrong stock. So that would be a kind of learning from you, and you would have 20 to 25 years more to earn, or मतलब कि मेहनत से that you can earn that amount in the market. That is equity. But when you have crossed the age of like 45 years or 50 years or 60 years, at that time you cannot take more risk, because at that time your main goal is to preserve the capital, or to preserve the amount that you have accumulated over the years when you were working in your job or doing your business. At that time, you cannot take risk. When you are young in your 20s or early 30s, if you lost that 100 rupees, you can work hard and get back that 100 rupees. So that is one thing everyone knows. And that is why equity is for those aggressive investors and young investors who can bear that risk in the market. And even if it loses their wealth or it causes a loss in their capital, they can work more hard and earn that money by any legal means like which they wish to. Okay, but like what happens when you cross the age of 45 years or 50 years or 60 years, your main aim is to preserve the capital. Like for example, if over your life and a person is above like 50 years, he has preserved like 1 crore rupees, like 1 CR he has preserved. Then investing that 1 crore of so investing that 1 crore of amount in equity market would be a foolish thing, बिकॉज इक्विटी मार्केट इज अ हायर रिस्क मार्केट. हो सकता है वो 1 करोड़ की वेल्थ की बढ़ने के चांसेस तो हैं, बट दैट 1 करोड़ की वेल्थ कैन ऑल्सो फॉल डाउन टू 50 लाख और 50,000 और इवन टू जीरो if the market is going on a negative way. So at that time when the person is aged, or a person has crossed the age of 45 years, he won't be investing in equity, because at that time his main aim will not to get additional return, but his main aim would be to preserve the existing capital. जो पैसा उसने कमाया है उस पैसे को बचाना would be the main motive for him. So at that time, what happens when the person crosses that level of like 45 or 50 years of age, and his main goal tends to be like preservation of the capital, so that person becomes risk averse. That is the terminology that we use in finance, which is risk averse. And for those people who were the young people in 20s or early 30s who were investing in market at their age, those people were the aggressive investors who can take risk in the market at that time. But a person who has crossed the age of 50 years or 60 years, it would be quite difficult for him and risky for him to invest his hard earned money into equity. Because अगर सारा पैसा डूब गया, तो he won't have much time left to earn that money back. But a young person, if his money is lost, he can earn, he can work harder and get that money back. That is why it is more advisable to see the risk appetite of that person along with the age. हो सकता है a 60 years person also has a higher risk appetite, and 60 years वाला person भी बोले I want to invest in equity, but that does not make a common sense. For that time, that person must have some financial literacy and some financial knowledge, and do not take decisions in haphazard manner. That equity will give me like more return. So even when I am at the age of 60, I'll be in like investing in equity. So risk appetite can differ, and there is no age for risk appetite. That if you are 20 years of age, then you are willing to take more risk, and when you are 60 years of age, like you would be taking a lesser amount of risk. So risk appetite, it differs from person to person. It is not age bound. But having knowledge of market, having knowledge of financial literacy, and seeing other things as well along with your risk is also important. That is why a person who is at a younger age, he invests in equity, much more amount of equity. Basically, like those people invest like more than 75% of their portfolio into equity. Okay. They can also invest 100% of them, but ideally, like they should invest like around 75% of their amount in equities. Whereas a person who crosses the age of 45 years, okay, his more than 70% of the portfolio would be in debt instruments. In debt instruments. Because that person would be taking less risk. Even he can invest 100% of that in debt instruments, or he can also invest like 90% of that in debt instruments and 10% in equities. So it is all upon him. But the higher the age that you attain, your risk appetite, it tends to be reduced if you take into consideration your financial literacy and financial aspects as well. ओके सो वो अपना डेट का कंपोनेंट ज्यादा बढ़ा देगा बिकॉज एट दैट टाइम ही वांट्स टू प्रिजर्व हिज कैपिटल. अब हमने बात करी फॉर इक्विटी, अब हम बात करते हैं डेट. अब व्हाई दैट पर्सन इज गोइंग फॉर डेट? द पर्सन इज गोइंग फॉर डेट बिकॉज डेट विल गिव यू अ फिक्स्ड रेट ऑफ रिटर्न. मान लो कि 100 रुपए का बॉन्ड खरीदा, दैट बॉन्ड विल बी गिविंग यू अ फिक्स्ड रेट ऑफ रिटर्न. मान लो कि 6% फॉर 5 years और 6% फॉर 10 years. So he can invest in a large number of bonds. Instead of investing in one bond, he can take a couple of bonds or 5 to 6 bonds. So that depends upon his knowledge or his perceptions. Okay, उसको एक बॉन्ड में करना इन्वेस्ट एक में करे, पर जैसे जैसे वो रिस्क एवर्स बनता जाएगा अपनी एज के साथ, so the number of bonds in the portfolio like would increase. So the benefit of bond is the bond will give you a fixed rate of interest. अगर 6% रेट ऑफ इंटरेस्ट बॉन्ड में बोला है, ठीक है, तो 6 रुपए तो मिलने ही मिलने हैं, 100 पर 6 रुपए हर साल तो मिलने ही मिलने हैं, एंड दैट इज फिक्स्ड. ओके, सो दैट इज हाउ डेट इट टेंड्स टू बी लाइक मोर कंजर्वेटिव, कि आपका पैसा नहीं डूबेगा. अगेन, डेट कैन ऑल्सो टेक यू इनटू लॉसेस. लोगों को लगता है दैट इफ यू आर इन्वेस्टिंग इन अ डेट इंस्ट्रूमेंट और इफ यू आर बाइंग अ बॉन्ड ऑफ द कंपनी और अ डिबेंचर ऑफ अ कंपनी, so that company would be paying you a certain rate of interest. If I buy a bond of a company or a debenture of a company or a security of a company which is related to debt instrument, that company would be paying me a certain rate of interest. And that rate of interest would be fixed. Irrespective of the market condition, equity goes up or equity goes down, that fixed rate of interest I would be getting in the market. People believe that. And it is completely fine. You will get a fixed rate of return. But for that, you would have to invest in a secure company or a company which is strong, the company which is able to honor its obligations. Because a large number of companies are not able to fulfill their commitments of paying the interest payments because of higher debt obligations, lower profitability, and lower cash flows. And because of these reasons, the company go into bankruptcies. And then there is huge cases of tribunals and appellate tribunals going around all these companies. Okay, so invest in those companies which are strong, which have a higher credit rating. You need to see the credit rating of the bonds in which you are investing. So typically, which the bonds which are above the AA grade, A is the best category. See, the triple A is the best category. Okay, so typically try to invest in bonds which are rated below like double A or maybe a single A. Okay, so these ratings might differ from different agencies. You have different credit rating agencies. You have Standard and Poor, you have Crisil, you have Fitch. So some people will take like for some organization AA would be the best. For some organization would take A as the benchmark, or some organization would take A minus as the benchmark. Okay. So all those securities which are giving you at least an AA grade, those are the investment grade bonds in which you can invest and you will get a certain rate of return. Fixed मिलेगा ही मिलेगा, and the company won't be defaulting upon that. So that are strong companies. But वहां पर अब risk नहीं ले रहे, वहां पे you are not taking the risk. And since you are not taking the risk, the amount of fixed coupon or the amount of fixed interest rate that you would be getting on that bond would be low as compared to some other bonds. Because the basic terminology of finance, higher the risk, higher the expected return. In case of strong companies, there is kind of less risk or equivalent to no amount of risk, because these companies would be like giving back their obligations or favoring their obligations and giving you a certain rate of return which they have promised. तो अगर 100 पे 6% हो रहा है तो 6% मिलेगा, because these companies are strong and they won't go into bankruptcy. Okay. Then you have a rating of B, then you have C, and last is D. D are basically for junk bonds, मतलब कि सबसे खराब bonds जो होते हैं. Then you have B grading. For B grading, say these bonds from a lower rating of B, like you have like triple B, double B, B. So जो B के जैसे जैसे like we tend to move towards C. So those bonds are called speculative bonds and not investment grade bonds. Investment grade bonds are the strongest bonds, but the speculative bonds are those bonds जहाँ पे कुछ default हो सकता है. 100% default नहीं होगा, but there is a chance that some default can be made when the bonds are trading below the B grading, मतलब कि B माइनस में आ गए या फिर C से स्टार्टिंग हो गई. Those are the speculative bonds in which like you will have a certain amount of risk. And if you are taking a certain amount of risk, तो रेट ऑफ इंटरेस्ट भी 6 से बढ़ के वो 7% हो जाएगा. मतलब कि 6 से तो ज्यादा होगा ही. 6.5 भी हो सकता है, 7 भी हो सकता है, 8 भी हो सकता है. Because in that case you are taking higher amount of risk to get higher amount of expected return, because these companies can also default as well. Okay, now you people will ask, when these companies can also default as well, then why would I invest my money into these companies? Why would I buy the bonds of those companies? So what happens in reality when people are buying the bonds or the shares of the company? They do not look at the profitability or the prospects of the companies or the credit ratings of these bonds. They just see the final return. And that is where financial literacy lacks among those people. So what happens if I go to one company? If like uh, so let's take a simple example. So there is the company A. That company is a strong company, a fundamentally strong company, a AAA grade company, okay, a triple A. That company says, I'm offering you a bonds at a rate of interest of 6%. So now you will say, like, this company A is offering me a 6% rate of interest on these bonds, right? You will try to find out some more companies who can offer you a better rate of interest, at least more than 6%. Then a company B would come to you. That company would say, I'm offering you, though I am a speculative, ठीक है, हो सकता है कि आई कैन डिफॉल्ट ऑल्सो, बट मैं अगर बोल रहा हूँ कि आई एम डिफॉल्टिंग, आई विल गिव यू अ रेट ऑफ इंटरेस्ट ऑफ मोर देन 6%, बिकॉज हियर यू आर टेकिंग अ हायर रिस्क. वो कंपनी तुमको 6% दे रही है, यहाँ पर यू आर टेकिंग द रिस्क, बट फॉर द रिस्क दैट यू आर टेकिंग आई एम गिविंग यू अ प्रीमियम फॉर दैट. Instead of 6% rate of interest, I will give you 8% rate of interest. So what you would say, though it is the speculative bond, you will still buy that company because ultimately you are looking more at the return, right? More, you're looking more at the return, but not at the actual cost that is being occurring. That is basically if the company goes into bankruptcy and all that stuff, right? The same case happened in Franklin and Templeton. Franklin and Templeton, like there was a company that closed its 6 debt schemes. So why did the company close its 6 debt schemes? And मतलब कि क्लोज होने का मतलब ये नहीं है मतलब कि लोगों के पैसे बर्बाद हो गए. दे हैव बीन ट्रांसफर इनटू अ सेग्रीगेटेड पोर्टफोलियो. अब सेग्रीगेटेड पोर्टफोलियो में क्या होता है, जो भी लॉस मेकिंग कंपनीज से लाइक जिनसे पैसा नहीं आता, तो उन सिक्योरिटीज को एक अलग से पोर्टफोलियो में डाल देते हैं. एंड व्हेन दिस लॉस मेकिंग कंपनी स्टार्ट टू बी अ लिटिल लाइक प्रॉफिटेबल, तो उनसे जब पैसा आता है तो वो सेग्रीगेटेड पोर्टफोलियो में आ जाता है, एंड उस सेग्रीगेटेड पोर्टफोलियो से इन्वेस्टर्स को पैसा मिल जाता है. So what does Franklin and Templeton do? They were investing in lower grade securities, in highly speculative securities और junk bonds. मान लो कि सीधा वो डी ग्रेड बॉन्ड्स में इन्वेस्ट कर रहे थे. अब डी ग्रेड बॉन्ड में करेंगे इन्वेस्ट, इनको हम जंक बॉन्ड्स भी कहते हैं. We call them as junk bonds. I'll just remove all this because it has become quite clumsy now. Yeah. We also call this D grade securities as junk bonds. Junk bonds. The most risky. अब जितना रिस्क होगा उतना हायर रिटर्न भी होगा. So अब सारे जंक बॉन्ड्स में नहीं थे, but majority of things, but like majority of the investments or securities were made in junk bonds or into bonds of those companies that can default in favor of higher return. अब लाइक उन कंपनी से पैसा आया नहीं तो स्कीम्स को बंद करना पड़ गया. अब उन कंपनी से लाइक जैसे जैसे पैसा आएगा तो जो भी लॉस मेकिंग बॉन्ड्स थे उनको अलग से एक सेग्रीगेटेड पोर्टफोलियो में डाल दिया. मतलब कि नॉर्मल पोर्टफोलियो तो चल रहा है, ठीक है, मतलब कि जो कंपनी स्ट्रांग है, बट जो वीक कंपनीज थी जिनसे पैसा नहीं आया उनको एक सेग्रीगेटेड पोर्टफोलियो में डाल दिया. अब जो लॉस मेकिंग कंपनीज जैसे जैसे मतलब कि रिवाइव होंगी, वहां से पैसा आएगा, तो दैट पैसा फ्रॉम द सेग्रीगेटेड पोर्टफोलियो वुड बी ट्रांसफर टू द इन्वेस्टर्स. ओके, तो दैट इज बॉन्ड्स. एंड बॉन्ड्स में लाइक इन्वेस्ट करने से पहले देख लेना कि कौन से बॉन्ड में इन्वेस्ट कर रहे हो, बिकॉज बॉन्ड्स आर कॉल्ड द फिक्स्ड इनकम इंस्ट्रूमेंट्स. ओके, अब बॉन्ड्स में भी मैंने बोला कि 6% का रिटर्न मिल रहा है एंड दैट इज फिक्स्ड. यू कैन फर्दर हैव अ फ्लोटिंग रेट ऑफ इंटरेस्ट. फ्लोटिंग में क्या होगा कि एज पर द मार्केट कंडीशंस, दैट रेट ऑफ रिटर्न ऑन दैट बॉन्ड वुड बी मैच्ड टू एन इंडेक्स, मे बी द गवर्नमेंट यील्ड इंडेक्स या कोई कॉर्पोरेट इंडेक्स. ठीक है, वहां पे जैसे जैसे जो मार्केट के रेट ऑफ रिटर्न ऊपर नीचे होंगे तो तुम्हारा भी रेट ऑफ रिटर्न ऊपर नीचे होगा. तो फ्लोटिंग रेट बॉन्ड्स आर ओनली बेनिफिशियल व्हेन द इंटरेस्ट रेट्स आर राइजिंग. तो इंटरेस्ट रेट्स बढ़ रहे हैं देन ओनली द फ्लोटिंग रेट्स आर बेनिफिशियल. कि अगर तुम्हें 6% मिल रहा है एंड रेट ऑफ इंटरेस्ट अगर 1% बढ़ गया देन तुम्हारा लाइक 7% का रिटर्न हो जाएगा. बट अगर कम हो गया तुम्हारा लाइक वही रिटर्न 5% का हो जाएगा. ठीक है, तो देख के इन्वेस्ट करो. इफ यू फील दैट द मतलब कि द रेट ऑफ इंटरेस्ट कैन राइज इन द फ्यूचर एज वी आर थिंकिंग राइट नाउ, बिकॉज द आरबीआई कैन लाइक increase the rate of interest. Even the Federal Bank of US is also increasing the rate of interest. So looking that perspective, you can start investing into the floating bonds for a longer term period. Because अगर rate of interest बढ़े रहेंगे तो वो लंबे टाइम तक बढ़े रहेंगे. So that things also you need to take into consideration. तो इक्विटी एंड डेट इंस्ट्रूमेंट्स में लोग भी इन्वेस्ट करते हैं. बहुत ट्रेडिशनल लोग हमारे मॉम डैड के टाइम से पीपल इन्वेस्ट इन एफडीज, दैट इज द फिक्स्ड डिपॉजिट. सम see a lot of see the disadvantage of fixed deposits is like there was a time when FDs used to give you a rate of interest of 8% or 9% or 10%, but now they give you 6.5% ज़्यादा से ज़्यादा या ज़्यादा से ज़्यादा 7% का rate of interest. And people think exactly 7% of rate of interest they are getting and that is fixed, इतना काफी है. But they do not look into the context of inflation. Average inflation 4 से 6% रहती है इंडिया में. ठीक है, एंड इन्फ्लेशन बढ़ी रही है हर साल. इन्फ्लेशन इंक्रीजेस. तो अगर आपका 6% भी इन्फ्लेशन है एंड एफडी का रेट है 6.5%, यू आर जस्ट अर्निंग 0.5% बिकॉज इन्फ्लेशन इज एरोडिंग द वैल्यू ऑफ योर मनी. तुम्हें लग रहा है कि यू आर गेटिंग 7%, यू आर गेटिंग 6.5%, बट इन रियलिटी यू आर जस्ट गेटिंग 0.5% और 1% बिकॉज ऑफ इन्फ्लेशन. Because inflation is reducing the purchasing power of money. To save your money or to have some backup के लिए, and that is so मतलब कि बहुत लोग बोलते हैं कि like मतलब कि do not invest in FDs. Invest in FDs, but do not invest only in FDs. ठीक है, इक्विटी मार्केट नीचे गिर गई तो जस्ट टू हैव अ बफर इन्वेस्ट इन एफडीज. एक सर्टन अमाउंट तुम्हारे पास सेव होगा ना. अगर मार्केट भी नीचे गिर गई तो मार्केट उठेगी, ठीक है, वो कभी ना कभी उठेगी. But जब मार्केट गिरी हुई है and at that time you want a certain money, you can break your FD and get that and मतलब get that money. So do not look FDs in terms of returns or profitability. Only look fixed deposits in terms of a safety buffer or an emergency fund and not for returns. पूरी जिंदगी if you are investing on FDs, you won't be able to be a rich person or a profitable person. Okay, that you need to analyze. And that you also need to keep in place as well. Okay, so that is one thing which I talked about FDs. So FDs को keep it as a safety buffer only that you need to keep into considerations. Okay, so these were the three instruments that we talked about today: the equity instruments, the debt instruments, and the FDs instruments. Further, we would be talking about some more instruments of investing in stock market in tomorrow's session at 6 p.m. Okay, so first try to understand the concepts of these three. These are basically the basic ones and some advanced techniques like we'll be talking about in